Believe it or not, ExxonMobil celebrates 100 years of business in Papua New Guinea this year, as you can see on the top right hand of the slide. And I'm excited to discuss the global and regional energy trends, as well as sharing updates on our planned activities in PNG. The last few years have been an extraordinary time, both personally, professionally, and across our industry. We've seen dramatic market shifts, as you've heard of earlier, both in terms of price and demand. And while uncertainty still remains, it's more important than ever that we stay focused on providing affordable and reliable energy to a growing population which continues to seek higher standards of living. But as we assess current and longer-term energy dynamics, there are typically three drivers that shape how the world uses energy. Justin actually alluded to a couple of these earlier. They're policy, technology, and consumer preferences. Each of the drivers actually influence each other with interrelationships dependent on local circumstances such as resource availability and public support. And the circumstances, of course, change over time as well, and so we continually study the energy dynamics to gain a deeper insight into forward trends. I think everyone will already know it's an obvious statement that reliable energy is essential to improving quality of life, including longer life expectancy, higher education standards, and stronger economies. Believe it or not, close to 1 billion people still live without electricity, and these challenges are directly applicable to Papua New Guinea. At the same time, we must deliver energy with lower emissions. So as shown by the chart on the left as you look at the slide, ExxonMobil's energy outlook projects that global energy demand will increase by about 15% by 2050 in comparison to 2019 levels. This growth is across all sectors, multiple sectors, and is due to developing nations adding 4 times what is reduced by developed countries through increased energy efficiency. The fundamentals, though, underpinning this growth is the rise in global population from 7.7 billion people today to almost 10 billion people in 2050. And while all energy sources will be required to meet that demand, as shown by the chart on the right, what is clear is the increased role that natural gas will play in the global energy mix. As you can see, oil is expected to remain the largest source of energy due to commercial transportation and chemical production needs. But over this time frame, natural gas actually grows the most of any energy type, reaching almost 30% of demand. And in fact, half of this growth will be made in LNG. Coal remains prominent in some parts of the world, but drops below 15% as China and OECD nations actually transition away from coal to lower emission sources, including natural gas. In fact, the last several years, China's war on smog and blue sky policies have significantly increased LNG imports and delivered measurable improvements in urban air quality. So natural gas continues to provide a reliable and flexible fuel and will remain important as the world drives to decrease greenhouse gas emissions. We've had this experience before though, and in the United States, the US electricity sector has achieved most of its carbon emissions, reductions between 2005 and now by switching from coal to natural gas. Approximately 500 million metric tonnes of CO2 have been reduced from the atmosphere in the space of 15 years. And remember that over 40% of the world's electricity is still generated from coal. Just imagine what we could do if we can accelerate the transition to gas. The trade in natural gas will also be a critical link between resource-rich nations and demand centres in Asia Pacific and Europe. As shown on the graph on the left-hand side, LNG more than doubles from 2019 to 2050, and of this growth, Asia Pacific represents 90% of the increase. Saul mentioned earlier that Papua New Guinea is well positioned to support growing regional demand with obviously a clear geographic advantage relative to other supply sources. As you can see on the map, the close proximity to Asian markets results in some of the lowest transportation costs and certainly the lowest transportation emissions in the industry. Yet for PNG to capitalise on this advantage, we must continue to compete for investment. And over the coming years, the LNG market is expected to remain highly competitive. In 2019, 75% of LNG exports originated in Asia Pacific, the Middle East or Africa. Looking ahead, North America's exports are projected to grow the most, with low-cost, unconventional gas underpinning additional investment. In turn, East Africa, Qatar and other regions are entering or expanding current market positions. As shown on the slide, third-party data from Wood Mackenzie indicates that over this year and next, there is potential for another 120 million metric tonnes per annum of LNG projects to reach a final investment decision. And to put that in perspective, Papua New Guinea currently produces 9 million tonnes per annum. So looking ahead, PNG will represent approximately 2% of the total global LNG market through 2030, even when we account for the Papua project. It's clear that LNG projects across the world are competing for a finite amount of investment dollars. And to win in this market, PNG's ability to attract continued investment will be critical. I'd now like to briefly talk about what has put PNG on the global energy map. And I'm very proud to say that is the ExxonMobil operated PNG LNG project. PNG LNG's success is of course a testament to the hard work from the ExxonMobil PNG workforce, but also the strength of collaboration between our organisation, the national government, provincial governments, our venture partners, the international finance community and the diverse landowner communities stretching all the way from Hela through to the central province. Such collaboration has resulted in PNG LNG building a reputation for excellence while positioning Papua New Guinea as a significant player in the LNG market. Since 2014 through to July this year, PNG LNG has generated over 16 billion kina in revenue to the state and landowners, which supports the provision of services and infrastructure for all Papua New Guineans. Underpinning the project's financial performance, standout areas include safety, reliability and high levels of nationalisation of the Papua New Guinean workforce. Only 8 years into production and 90% of our workforce are now Papua New Guinean. And at the end of 2021, that includes 120 in senior professional roles, including managers, supervisors and team leads. For a project still in its relative infancy, these are defining achievements when compared to other global LNG projects at the same stage of their life cycles. PNG LNG has also consistently achieved high levels of uptime and provided buyers with a reliable supply of gas thanks to robust technologies, showcase operations resilience and efficiency. In 2021, we achieved our safest year on record and this performance continues into 2022. In addition, third-party benchmarking shows that PNG LNG facilities are already at the leading edge in terms of greenhouse gas intensity efficiency, and by investing in new technology, maintaining high levels of reliability and focusing on flare reduction programs, we forecast further improvements in our greenhouse gas performance. From a production perspective, in July, we achieved our highest ever daily LNG throughput, and we have now safely delivered over 850 cargoes to market. It's an incredible achievement and something that we can all be proud of. The PNG LNG project is truly a world-class operation. Now let's turn to developments currently underway and what lies ahead. In July this year, we were pleased to announce the restart of the Angore project in the Hela province, which was suspended in 2020 due to COVID-19. It actually contributes to the trend that Clarence referenced earlier. Angore is at present the only significant oil and gas construction underway in PNG. For those not familiar, the Angore project is approximately a 5.5 billion kina investment located east of the Hides gas conditioning plant, and it recently achieved a significant milestone with the completion of the first new well pad since our foundation project, which is shown in the picture on the slide. Pipeline construction is currently underway and drilling operations are expected to start in the coming months, and we're certainly looking forward to bringing online Angore gas in 2024. Meanwhile, Total Energies, as operator of the Papua LNG project, announced the joint venture's decision to enter the first phase of front-end engineering and design studies for the project's upstream production facilities. In parallel, studies for the downstream liquefaction facilities, which will be operated by ExxonMobil, are progressing in line with the overall project schedule, and we have an intent to launch an integrated feed in the fourth quarter of 2022. Once online, Papua is expected to produce about 6 million tonnes of LNG per annum. Separately, in February, the PNG State, ExxonMobil, Pyongyang co-venturers all signed the Pyongyang LNG project gas agreement for the 4.4 trillion cubic feet resource development in the Western Province. If PNG progresses, it will see landowner benefits while creating significant local business and employment opportunities, as well as new social investment initiatives. Further, the development plan phases PNG to follow the Papua project, which could generate approximately 8 years of continuous construction activity, supporting ongoing economic growth and creating jobs across multiple industries. In fact, between Papua and PNG could see more than 65 billion kina invested in the country over the next decade. Finally, ExxonMobil is also continuing to advance exploration activities and assessments. We currently hold a range of exploration licences in the eastern and western fold belts, and in 2022 are actually progressing our first ever ExxonMobil operated seismic program in the country. The seismic camp is shown on the slide there behind me. In fact, since 2010, ExxonMobil and a mix of venture partners have invested more than 2.2 billion kina on exploration. But as shared earlier, while PNG has enormous potential, it must remain competitive. Clear, predictable fiscal frameworks and regulations will be required to attract capital, and that applies to future exploration as well. So trends in policy, technology and consumer preferences demonstrate why gas is such an important part of the world's energy mix. As PNG moves forward, it is essential we all remember what made the PNG LNG project a success and what will be required for future developments to progress. Legislative and regulatory policy can stimulate continued investment in PNG, further underpinning the country's economic development for decades to come. The corollary is also true though, and we've seen it before elsewhere. Policy choices can disincentivise investment also. PNG has such high quality resources, highly capable people, and a demonstrated reputation to deliver. If we capitalise on these well, just imagine the potential. Thank you again to the PNG Business Advantage team and to my fellow speakers. I look forward for the opportunity to engage with you throughout the conference, share insights and learn from each of you. Thank you.